Do you envision yourself retiring early and living a luxurious, comfortable life throughout your elder years? Although some analysts speculate that purchasing Tesla stock could be the means of realizing that ambition, the business has revealed its fourth quarter financial results, providing investors with even more motivation to contemplate purchasing shares, especially in the face of fierce competition and market obstacles. It makes sense that people are feeling upbeat given that Tesla's announced results above analyst expectations and that the company's shares have increased by more than half since last month. Continue watching this video if you're interested in learning more about the possible advantages of investing in Tesla and placing your trust in the powerful Elon Musk, but make sure to use the like and subscribe buttons before we head there. Do you believe that investing in Tesla stock will let you retire early? Because so many people have expressed hope about the idea of retiring early thanks to an investment in Tesla shares. Experts advise against missing out on this hot growth company. Even while it's advised against getting too hung up on quarterly reports, many investors still do so because they can help shape patterns and confirm or refute stock experts' assessments of a company's future. By announcing its third quarter financial data, Tesla has given investors even more incentive to think about buying its shares, despite the company's increasing competitiveness and other market difficulties. Definitive's analyst survey expected $0.99 per share, but Tesla posted earnings of roughly $1.05 per share, compared to experts' projected sales of $1.96 billion for the third quarter of 2022. The company's reported revenue for the same period was $1.45 billion. The net income gap for Tesla was $3.33 billion, while the car industry's gross margin stayed at 27.9% from the previous quarter. Compared to the previous year when it made nothing, Tesla made $1.62 billion during the same period last year. In the last quarter, the automaker's operating free cash flow increased to a new high of $21 billion, or $3.03 more car. Given that the price of Tesla shares has risen by more than 50% in the past month, investors are feeling more confident that their investment will enable them to retire early. During the aforementioned results call, queries about macroeconomic and economic issues, as well as CEO Elon Musk's impending takeover of Twitter were addressed by Tesla executives. By 2024, when the price was only little over $400 per share, you would have over tripled your initial $1,000 investment in Tesla. Your return would have been considerably higher if you had traveled back a few years to November 2nd, 2016, when Tesla was trading at between $30 and $38 per share. Tesla has not specified when the Cybertruck and Tesla Semi will go on sale, despite the company having announced their arrival. According to the stock's climb from $5.74 to $1,229 over time, an investment of $1,000 in Tesla in November 2011 would be worth about $200,000 today, a return of more than 20,000%. Contrarily, investing the same money in the SP 500 would have only produced a 35.7% return, which is still a respectable return, but nothing in contrast to Tesla's. It's true that the Nasdaq is naturally diversified because it owns every stock in the SP 500, but that doesn't mean Tesla won't have more downturns in the future. It's also true that the majority of analysts, including the venerable investor Warren Buffett, believe that most people would be better off investing in the Nasdaq. It's safe to say that Tesla has established a solid reputation in the industry, and the EV maker's current success indicates that it will grow even more. Many Tesla supporters who back the company because they also want to see a cleaner, greener world hope to sell their shares of the company at some point and live comfortably in retirement. In a Western nation such as the US or the UK, one needs at least $4,100 a month to retire comfortably in the US. This equates to approximately $47,000 in direct retirement income. People who live overseas, such as those who have already decided to retire someplace else, possibly in Panama or Mexico, where they may live on far less during their golden years, are doing so in the interim. But if you would prefer to remain in your present nation and require at least $4,000 monthly to live comfortably in retirement, and you wish to retire by 2030, the required minimum amount should be raised to around $50,000, taking into consideration inflation with a standard 5% withdrawal rate. You will require at least $1 million and will need to stop working for at least 20 years before you run out of money if you wish to retire with $50,000 annually and use only 5% of your retirement savings annually. Although it seems like a lot, as Tesla continues to grow at an exponential rate every year, astute Tesla investors may be able to afford it. Why should we think that Tesla will continue to generate these profits? Let's listen to two distinct specialists. Renowned investor and CEO of ARK Investment Management, Cathie Wood, is a big fan of Elon Musk, the man who founded Tesla. ARK Funds acquired 806,663 Tesla shares for $105.4 million in January alone. In her flagship ARK Innovation ETF, Tesla is ranked third in size behind Exact Sciences and Zoom Video Communications. Wood is upbeat about the company's future and projects a potential 5-fold increase in stock price over the next 5 years from electric vehicles alone, and up to 13 times the recent price if autonomous cars become more commonplace. despite Tesla's stock price. Dropping by 58% over the past year due to production and demand concerns, she thinks Tesla will thrive because of its aggressive pricing strategy. Tesla can afford to do this, the woman stated. It is innovating at the fastest rate and has the lowest cost structure. The other automakers will have to comply with these price reductions, but it will adversely affect their margin and profitability. Let's listen to Ron Barron now. Billionaire money manager Ron Barron hosted the Barron Investment Conference at the Metropolitan Opera House in New York City, drawing up to 5,000 investors and media representatives despite a challenging year for West. An onstage conversation with Elon Musk was one of the event's highlights. Despite Tesla's difficult start to the year, Barron has increased his stake in the company's stock from 41% in early 2021 to a staggering 45% of one of his largest funds. In spite of the current slump, the company has demonstrated a strong track record of long-term gains over the last 5 years. The Barron Partners Fund has returned an average net analyst return of more than 25%. Barron gave his money back with confidence, pointing to the company's strong growth prospects and buy and hold investment approach. He thinks that during the next 10 years, Tesla will surpass all other companies in terms of size and profitability, and his company is among the top 20 largest investors in the electric vehicle manufacturer. Let's hear from none other than Gary Black lastly. As the maker of electric vehicles makes up volume loss to price reductions, Gary Black, managing partner of Future Fund and well-known investor in Tesla, forecasts a sharp rise in the company's sales volume. He thinks Tesla would win this pricing war since it is the market leader and can lower its prices more than rivals because of its larger gross profit. Black claims that despite a difficult year for Tesla's investors, the firm is still cheap, particularly when compared to companies like Apple, Microsoft, Amazon, and Google, whose stock prices are rising by 30 to 40% annually. According to Black, Tesla ought to be selling at a greater multiple than GM, Ford, or Volkswagen because it is growing at a rate of 35 to 40% annually. In conclusion, with Tesla's shares rising more than 50% in the past month, investors appear to be bullish about the company's future prospects. Over the years, Tesla has demonstrated remarkable growth. A $1,000 investment in 2011 is now worth nearly $200,000. Investors are optimistic about the company's future growth prospects as it has big plans to expand into robotics and artificial intelligence. However, because of supply chain interruptions and shutdowns related to COVID-19, there are still significant doubts about the company's capacity to reach its production targets in 2023. Despite these difficulties, Tesla appears to be destined for long-term success based on its recent achievements. Purchasing Tesla stock is possibly the smartest move you can make right now if your goal is to retire from your work by 2030. Subscribe to this channel to get more videos regarding Tesla stock. Please hit the like button if you enjoyed it, and I'll see you in the next one. Has big plans to expand into robotics and artificial intelligence. However, because of supply chain interruptions and shutdowns related to COVID-19, there are still significant doubts about the company's capacity to reach its production targets in 2023. Despite these difficulties, Tesla appears to be destined for long-term success based on its recent achievements. Purchasing Tesla stock is possibly the smartest move you can make right now if your goal is to retire from your work by 2030. Subscribe to this channel to get more videos regarding Tesla stock. Please hit the like button if you enjoyed it, and I'll see you in the next one.